Hello, 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 hello. How's everyone doing? Happy Thanksgiving week for those in the US of A. Happy shortened trading week for everybody else. Good morning. Is this Jake? Is Zelda the Magician's Jake? Is it still showing up with the other handles? I know that's Royal Palms. Good morning. Good morning, Patrick. Thank you for putting in the news, Sterling. Sterling's going to have his turducken. It's defrosting, right, Sterling? Your turducken's all defrosting for your Thanksgiving. Good morning, by the way. Good morning, Mark. Good morning, Stafford. Hope you have a happy Thanksgiving, Stafford. Good morning, David. Good morning. Oh, there's Jake the Snake. Good morning, Daniel. Any PTP Black Friday deals? Somebody's got to reach out to, I don't know. Not for me, because I don't run any of that stuff. You see the amount of things that I charge for. I don't run any of that stuff. You got to run out. Somebody's got to reach out to Bob. Uh, Hello, Charles. So, thank you for putting in some of the news. Goldman Sachs, we forecast China equities to rise 30% over the next 2 years. All right. Waller's advocating for a rate cut. Big shock there. What else do we have? Amazon data center did not see tally tops 900. I think we're going to overbuild in data centers. Oh boy. Oh, what else? What else do we have? Again, did I say did I say hello, Charles? All right, we have a shortened trading week. Shortened trading week. What do we have going on today? We have not much. Dallas Fed Manufacturing Index and 3 and 6 month bill auctions. Very quiet day today. Tomorrow we got some PPI numbers for September. We got Redbook. We got retail sales is probably the big one because that's also, but that's all the way back for September. What else do we have? I mean, consumer confidence, business inventories, Dallas Fed Services and Revenues Index. Wednesday, we have, because remember, Thursday is Thanksgiving. We have initial and continuing jobless claims. We have durable goods orders, and we have the EIA numbers, as always, on Wednesday, unless there's a holiday on earlier in the week. And we got Fed Beige Book. Thursday, there's no Thursday here because it's the holiday, and Friday, it's a very quiet day. Fed balance sheet. So that's where we sit there. Going into the open, we have Mag 7. Mag 7 running higher. Oracle still dropping like a rock. Chips still strong. So that's where we sit right there. Groups. Let's just refresh this. Good morning, Jacob. Good. We've got comm services. Leading consumer cyclical technology, consumer defensive only up 3 basis points, and energy the only thing that's negative heading into the open. Fed watch after whose comments was it on Friday, but it tipped. Now we're back to 75% for the cut in December. Lots of non-agreement for this next Fed meeting. Still in extreme fear mode. Schiller PE, below 39. What are we going to do? Rush out and buy everything? The market's so cheap. Earnings. We have Zoom after the close is probably the biggest one there. Tomorrow morning we got Alibaba, NIO, Abercrombie Fitch, Kohl's, Best Buy. Nothing market moving, but a lot of things that are interesting. And after close tomorrow we have Dell, Workday, Zscaler, Autodesk. And Wednesday, besides some companies I can't pronounce, we got John Deere. So that is nothing on Thursday, and then I don't know. I don't know what that is on Friday. Don't have any idea. So, boomer advice. If active successful investor only IRA worth its Roth with no taxes on withdrawals and not mandatory withdrawals. There you go. There you go. So, what am I watching? What am I watching? Well, we bounced back on Friday. after hitting the first target on the double, we do have a potential percent B buy if it were to trigger by closing above Friday's high. The other thing, if we do rally this week, I'm keeping an eye because it would be a potential percent B buy if we close back above last week's high. So if we have a strong rally this week and manage to close above the weekly high from last week, it is a percent B buy. Other than that, we're still holding the weekly rotation zone on the S&P. We finally dipped to the 21 and hit that first target on that double. And we are now against the daily rotation zone on the ES. So it gets a little riskier to buy. That's why it's got to be managed closely. And the stop is really challenging on this one. Technically the stop would be below a Friday's low, but that's not where I'd be looking at in the short term. Looking, if we do break above the high and that does trigger for tighter stops, we have the 50 overhead and the 21 overhead and the 50% harmonic 67.38 from the highs to the lows. Highs to the lows. So this 50% harmonic is right near a significant breakdown area, and we spiked above that area on Thursday before the strong reversal. So this is a very key area, about 67.38 to 67.45. All right, what am I looking for today? We have 66.65 has been a key resistance area. A very key resistance area. We're trading above it. Right, we're trading right at it right now. And my breakdown area is about 66.20. But if we can sustain above 66.65, we go into the one major dropping candle, and then the next area is about 6,700. You're looking at about 6,700, and then we have another key area about 67.25. So those are the key areas you're looking at, 6,700, right around there, and the 67.25 area for any short-term buys. And what would that do? That would take us, if it can sustain above there to the 6,700, that definitely takes us above Friday's high. Morning, morning, morning. So NASDAQ, same thing. Possible percent B buy above Friday's high. Possible weekly, if it does rally strong, percent B buy above last week's high. In the short term, we're trading right at the key level I'm watching, which is this 24, 5, 45, 50 area. We can sustain above there. There's minor area about 24, 695 to 24, 7. And then we're looking at more significant area up around 24, 900. Okay, and that would definitely take us into the overhead rotation zone and close to the 50 EMA, which is now hooking over down. So again, the percent B buy on, if it were to trigger, has to be managed very, very closely. Good morning, Heinrich. Good morning, Odie Green. After trading NQ for years, levels are zones of overshooting. Those are zones of overshooting. I'm not fully understanding your comment. If we do break down, I'm watching closer to this 24, 390, 380 area. And then my first target's about 24, 175 to 24, 2. If we do, remember there was no double in the NASDAQ. So the overall 23.9 was major support last week, and a harmonic cluster. We did break below there, 23.598. Did forget to go over the lower targets. If we did take out Friday's low, we still have 64.71 and 64.10 as the remaining double targets. The Dow does not have a percent B buy above last week's high. So That's really about it. My major target area, if we run up, is about 46,860 and then 47,150. 150. If we roll over, we still have a couple targets left at the downside: 45,371 and 44,930. The Russell, also no potential percent beat buy based off Friday's high. The other key breakdown area is actually a little higher than this. I didn't update it. It's around 2407. And then you're going into 21 EMA and the 50 EMA. And Russell also gets challenging because there's another key area right around 2425. So there's lots of overhead resistance to get through. And then you have 2433, the 50% harmonic from the high to low. So that's what's key on the Russell. The area I'm watching, if it starts breaking down, is closer to 2363 for any breakdowns to get minorly bearish. The VIX pulling back a bit, but still elevated, pulling back 2235 where we're trading now. I'm still paying attention on a further drop at that 20 level, but if we start dropping below 22 this morning and we stay above those key resistance areas I'd already talked about, I'll look for some buy setups. DAX bouncing into the rotation zone. And that's about it. DAX, now we have a major overhead resistance, including the 200. So in order for me to get bullish at all on the DAX, we have to really start forming a solid base. There's nothing from my perspective there. The yields are dropping a bit based off of some dovish Fed comments. What's interesting, we don't have any word from Powell since the end of October. So I think it was October 29th the last time I heard from Powell, from Jay Powell. So coming in, key support is back of the 4 handle for the yields. 4. What else do we have? The move index after Thursday dropping down. So if this continues to drop, we'll watch again for a continued more quiet in the bonds and the yields. So then we'll look for potential that sustained Thanksgiving rally, at least this week, has a slight bullish bias, but this year's could be very interesting. So it's not just buy. I'm waiting for some things to trigger and then manage tightly. Crude still holding the downward channel line. Crude has a potential mini double bottom right here. That's about the only short-term setup against that very key channel line. Sorry, wrong peak. I think that's right. I think that's the right one. Yep. That's the right one. It's a 4-hour setup, by the way. That would just be for a bounce play. You see here on the daily back into the daily rotation zone, which is now separating and providing overhead resistance. Natty gas, still there's a potential double top there. Not triggered. Gold's gone to sleep. There is a very did not invalidate the pattern yet, but there is a little 4-hour double bottom. Needs a close about 4134.3, and you see the first and the second targets definitely work: 4192, 4221. That's about the only bullish thing that I have. Major supports coming in at the 50. Silver does not have anything right now. Nothing in silver. The dollar index, we closed last week. We officially triggered the massive double bottom. The massive double bottom is officially triggered. So we do have a little minor 4-hour potential double top. We're still catching on the 4-hour rotation zone, but if that were to trigger, I'd be looking for pullback areas only that would take it into the daily rotation zone. Euro technically would, if we broke above Friday's high, would have a minor scalpy percent beat buy. Don't know if that will trigger at all. And this, I did not look at this earlier to see if this qualified. And it technically does. So there's a minor little double bottom here. So it would need just like the double top in the dollar, you have a potential double bottom on a close above 115.52. Bitcoin, we've had the little bounce in Bitcoin. Technically, it triggered a percent B buy on Sunday against the rotation zone. Bitcoin came also down and completed the 87.5 rule in the short term. Very oversold. I'm looking for some kind of stronger bounce setup at all, especially if we drop back down to closer to 78,000 for a bounce play only. What else? We got the spiders again triggering. We have the triggered uh, double top, that has not hit the first target yet. Key areas of resistance in the spiders are about 664.75 to 665.50. And then above there, we're looking closer at 668. The Qs, we would have been a close. I forgot to look at that for the spiders. I did not because I've been too focused on the futures, but above Friday's high is a percent beat buy for today only against the rotation zone. Same notes apply as the futures. Same thing. The Qs would have a percent beat buy. These have to be managed really close if you're looking to do that, because we have the overhead rotation zone and the 50 EMA. Can we talk about Google above the 310 target pre-market? The good old Alphabet. Sure, the next target higher is 329. That is the next target higher. Should it continue to run? If you want the closer targets, then it's the little harmonics here. The little harmonics here. If you need a closer target, it's 315.17. And this harmonic cluster is now back at 310. 310.50 is your support level before the gap fill. But those are your two targets. Minor target 315, major target 329. Okay. I am watching for a potential topping pattern coming in at some point with Google to at least trail a stop, but there's nothing yet. Uranium. The problem with crude now going down, especially as the war is resolved, is crude starts coming offline in the U.S. if they're not profitable. Needs to stay really close to $60. You start dropping much below that, like we're at 58 now. Some wells are unprofitable from a fundamental standpoint. Uranium hit the first target on the double, dropping below the weekly rotation zone. Still looking, remember, uranium is very volatile. If we break below Friday's low, I'm really watching this next target area between the 200 and at around 37. Okay, there is an aggressive percent B buy, again, against the rotation zone if it closes above Friday's highs. For me, that would be for a bounce play only because we don't have a super strong bottoming pattern just yet. But that's where it sits with uranium. So, does that mean the move is completely over? Well, if we look at the bigger term charts, These levels are not valid anymore, by the way. We've just returned to the monthly rotation zone. So I will be watching for, and we're still against the major breakout level. So I will still be looking for bullish plays, but those have to be managed from my perspective closer on the secondary reaction now. This next reaction bounce up is going to be critical in the short term for uranium. FXI. There you go. FXI weekly from 21 high and 24 low failed 62% retracement and now at the 50%. It was pretty close to 50. Yep, it failed against the 62.5. So coming back into a very key support level. Very key support level. There you go. There's your daily. So for the China bulls, the China large cap ETF iShares, it's got to get still close above 41.93. 41.93 is key. This is actually real interesting because last week closed right at the bottom of the rotation zone. With that, that's it. That is it. Again, because of the bullish bias, if these rotation zones and all this wasn't in the way, this would be an easier buy. That's why I say it has to be managed real closely. Real closely if that triggers. I'm just not blindly buying this week based off of historical patterns with a slight bullish bias because there's been a lot of selling pressure in this market recently. But if it does trigger, it tips the short-term probabilities where we could continue a bounce. And then I would be more bullish if things followed through and closed above last week's high. Then we could see at least a retest of the highs and a possible breakout with a major divergence up there at new highs. That's where we sit. If we take out Friday's lows, though, because we still have the remaining two targets in the double. That would not be good for the bulls. By the way, for hedges, I'm going to watch how things behave this week, especially if we get a bullish bounce and the VIX dropping back down. Because unless we triggered that weekly percent B buy, I will be looking for potential new hedge opportunities. That's about it going into the open. Hope everyone has a wonderful trading day. I will still be normal schedule. I will be here Tuesday, Wednesday. I have not decided whether I'm doing a stream on Friday or not. But Thursday is definitely no go. Thursday I will be dealing with Thanksgiving. And then Friday, but I'll let you know on Wednesday about Friday. We'll see how this price action unfolds. With that, I shall talk to everyone later. Bye for now.